Welcome to the IRS Debt and Audit Podcast with Brian Loughrin.
Hey everybody, welcome to an all-new episode of the IRS Debt and Audit Podcast with Brian Loughrin. I'm your host, Mike Lien. Brian's a veteran tax attorney with over 25 years of experience helping individuals and business owners resolve serious IRS problems. He's admitted before the U.S. Tax Court, represents clients nationwide in audits, debt resolution, and federal tax disputes. And in today's episode, we're going to be discussing the difference between a tax lien and a tax levy. You're going to explain all this to me, Brian, because I need to understand the difference. They may sound similar, but they work very differently. And if you don't know the difference, you could miss your chance to stop serious damage to your finances or even to your property. So, Brian, let me ask you at a high level here. Let's start just real basic here. What exactly is a tax lien and how does it work?
Thanks for having me, Mike. Tax lien is, at its most basic level, a representation of debt. I tell people that if, say, for instance, you finance a mortgage and get a copy of the deed, you have a lien on the mortgage. Or on the deed, rather, it's a mortgage lien. If you finance an automobile or a boat, you'll get a lien on the title to that automobile or boat. It represents that you have a debt, but beyond that, it allows the person that you are indebted to really an easier access through the law to collect on that debt if, for whatever reason, you either default on the debt or ignore the debt. And that is really at its most basic level what it is.
All right, now let's do the same with a tax levy. How's it different and what actually happens when a levy is issued?
Well, a levy is where the IRS will actually come in and seize property. And by property specific to a levy, tax levy like this, I'll restrict it to finances or to money. A bank account, such as a savings account, checking account, some type, maybe a money market, something like that, something outside of necessarily a retirement account. So a levy is kind of like a heart attack. It happens. It's not bluffing. It's there. And when people are notified of a levy, it's pretty startling to them. And that is, I get quite a few calls. People say that they've just checked on their finances and found out that their account is at negative due to some type of a levy. And obviously, in my case, it's usually an IRS levy.
So it sounds like, but using the heart attack analogy, right? Like a lien's the warning that you're about to have a heart attack, whereas the levy's the actual heart attack. Is that how you explain the difference to your clients?
It is. If people say, what's the most surprising thing about this work that you found over the last 25 years or so that you've been doing it? What is the thing that seems to come up all the time that is still surprising? And I said it's really people's reactions to having a tax lien. And liens are generally not generated on balances under no magic number, but usually under $10,000. The IRS most of the time will not file a lien. Usually $10,000 and above is a rule of thumb. And a lien doesn't get generated in every instance. I've had clients that owe seven figures into the millions and have never had a lien filed. I've had clients come in that owe $11,000 and a lien is filed. So there's technically a reason for that with the IRS. I don't know if it's just the computer system or what, but people are startled when they get a tax lien or a notice of a tax lien. And in the instances where people don't owe tax, well, then certainly I can understand where that's very distressing. But in those cases where people acknowledge and are aware of a tax debt, I tell them a lien is just, as I say, a representation of debt, and it's something that allows the IRS, if they decide to enforce the lien or to collection of the debt, to exercise the lien more easily under the law.
Brian, you kind of danced around a little bit about how they work together in these collection cases. I'd love for you to elaborate more, but can somebody have a lien and a levy at the same time?
They can, and it won't happen on the same day or really even the same week or necessarily the same month. A lien is kind of a warning shot that, hey, you owe us. We've tried to get this debt satisfied either through full payment or a formal resolution. It hasn't happened, so therefore we're filing a notice of federal tax lien. Generally speaking, when the levy occurs, it's after a period of time, and people say, well, how much time do I have? Do I have a week? Do I have a month? And I say, I don't know. I don't think the IRS knows sometimes. The thing is, these are all computer generated for the most part. There are instances where cases are assigned to the field, meaning there's a local revenue officer working the case. And in that instance, it isn't an arbitrary issuance of a levy. They do provide ample notice to people before they levy. But at the national level, where the case is not assigned locally, It's sometimes it can go years without a levy ever happening. Other times it can happen very quickly after a lien is filed. People say, well, what's the difference? How come you don't know? And I say, listen, IRS is it's 330 million people in this country. There's an estimated 200 plus million tax returns filed every year. That's a lot of people, and that's a lot of tax returns. And while the IRS is big, they ain't that big. They don't have 10, 15 million people working there. They don't assign cases that often to the field relative to the national level. So sometimes there's not a real clear indication to know when it's going to happen, but suffice it to say, if you've received a notice of federal tax lien, certainly reach out to our office because we can get in front of it. And if you follow our direction, we'll prevent a levy from happening.
So, Brian, you just mentioned it there. So let me ask you, because I would love for you to explain kind of the triggers of what triggers a lien, what triggers a levy. But you mentioned about letters. So is it just different letters, or are there deadlines that someone should be watching for?
Well, the IRS doesn't really use email. I mean, in a very, very limited sense, they might if the case is assigned to someone in particular, not being handled by a computer. And in those instances, the amount of communication is very limited. You can't use social security numbers or names and so forth. It's very limited. So for all practical purposes, the IRS doesn't really use email. They use paper mail and they use fax. So the IRS, when they are approaching a taxpayer, they will send a notice or a letter. And people say, well, I never got anything in the mail. I never received anything. And what's going on? I say, well, I can assure you they sent out many, many letters to you. You just may not have received them for whatever reason. One of the reasons is the IRS generally works off the address on the last filed tax return. So if somebody's behind on their filing, say they're a year or two or more behind and they've moved, the IRS is going to send notices to their old address. This is despite people saying I changed my address at the post office or my W-2 has my current address. None of that matters to the IRS when it comes to collections. So you definitely need to change your address directly with the IRS. But they do send many, many notices before they ever issue a lien. And for that matter, certainly before they issue a levy. Absolutely.
You hear that, Mom? They're not emailing you. That's not the IRS. I told you they sent you via the mail. So but let's get into the consequences part of this. Let's take liens first, and then we'll go into levies. Because how does a tax lien? I'm sure somebody watching this or listening to this, they go, "This is going to affect my credit or even loan applications I apply for." So how does it affect all of that, or even their ability to sell a property?
Liens are filed in the county in which the taxpayer resides, which is always the county with the most recent address for the IRS. So people move, and it may not be in the county they're currently in, but it was in a county that the IRS has a record of their filing last time. And so when the liens are issued like that, it's a matter of public record. And what happens is the person gets a copy of it, the same thing that's sent to the courthouse. And it used to be that those notices would also be sent to credit bureaus. But the IRS, being that they're much kinder and gentler now in 2025 than they used to be, as I've heard, they don't any longer report to the credit bureaus. So it's not automatically on somebody's credit. As to affecting somebody's ability for credit to go forward to buy a home or to buy a car, boat, et cetera, like that, remember, a lien is a representation of debt. So when you're applying for a mortgage, if you're applying for well, not even auto loans and all that, it goes through credit bureaus, but just different types of things. It says list your assets, list your debts. Well, obviously, you're going to list your debts that you have for credit cards, bank loans, and so forth, and you would list what you would have for an IRS debt. But is it per se automatically slam somebody's credit? No, it does not. It's not an automatic on their credit. In fact, there's people that go through life with tax liens they never even know about. And they never even find out about because they've moved and then the debt eventually gets extinguished.
Well, look at that. See, breaking ground here. I didn't even know that. So, but let's go to the levy part of this. How fast can the IRS actually take money from your bank account if you have a levy or your paycheck once they issue one?
Well, again, I use levy in the sense of like a bank levy or a savings account, checking account, money market, something like that, something more of a liquid asset. When you talk about wages, you're talking about a garnishment, and that's W-2 wages, where you get the person from HR sending you the email saying I need to talk to you, kind of thing like that. And a lot of people want to avoid that, especially professionals. The last thing in the world they want is somebody in their company to know that they have a tax debt. Yeah. And when they get a garnishment notice, I've never seen a business not honor it, ever. So the businesses are not going to side with the taxpayer and say, hey, let's just stick it to the man and ignore this. They're not going to do that. They're going to fall all over themselves to put that garnishment in place. But kind of what dovetails in between those is what I call an accounts receivables levy. And for a lot of my clients, the vast majority, they're small business owners, they're self-employed. And some of these small businesses have the bulk of their income from maybe one or just a few sources. And the IRS can easily see where the money's coming in from. So if they issue a levy, an accounts receivable levy, and they issue it to, say, an entity, one or two or three that this business receives their income from, that'll choke the business to death instantly. And again, I've never seen a business, in the case of an accounts receivables levy, say that no, we're going to side with the taxpayer and we're going to tell the IRS, take it and go pound sand. It just doesn't happen that way. So you want to avoid a levy. Now, one important thing about bank levies, even accounts receivable levies, is this: when a bank levy goes through, and people usually find out because they have an app on their phone, or they will log into their account and they'll see it's at zero, or in some cases negative, because the banks will charge anywhere from $100 to $150 service fee when they receive a levy. Something important to understand is that the bank must hold those funds that they've frozen for a minimum of 21 days before they send it to the IRS. And so there's that window of time that if somebody contacts us, we have a time frame where we can work to try to get that levy released. But I want to say this: I see different ads out there that say, if you've been levied, call us, we'll get you your money back. It's possible, but it's not that often that it happens. And that's because, like I said earlier, a levy is like a heart attack. It's kind of the end of the road for the IRS. And if they levy you and they get some or all of the money that you've owed for a period of time, they're very reluctant to release it. But there are certain instances, certain hardship cases, where if you can demonstrate that to the IRS, that they will release the levy, maybe not in full, but maybe a good portion of it, so that you can continue on just living, a daily normal life while you work forward to getting things straightened around.
So Brian, let me piggyback on that, because what options does somebody have once a lien or levy has been issued? Is there a time to appeal, negotiate, or even resolve the debt in full?
There are, and it's right there in the levy notice. And let's go to the lien notice. You have an opportunity. In some cases, you can even forestall a lien being filed. You'll get a notice. The IRS has letters, and their communications are all numbered, either with a CP, computer generated a number, or an LTR, which is a letter number. So when people call our office, I say, do you have that notice with you? And they say, oh, I'm looking at it right now. So in the top right corner, there's it'll say LTR or CP. What is it? And they'll tell me what it is. And that lets me know where in the collection process it is. Because again, some people are under the impression that you file your taxes and you get a bill in the mail, the IRS is going to come to your house the next day. It doesn't work that fast. It takes a much longer time than that. And again, there's 330 million people, over 200 million tax returns, and probably an estimated 20 million people that owe the IRS. So they don't move that quickly. But you do have some time frames, but those frames are usually in the first few notices. And so in some cases, we can file and prevent a lien from ever going into place. Other times we can file and ask for a lien to be released. But again, those are generally true hardship situations. And those hardships are not just that somebody needs money to live on, because everybody needs money. It's situations where maybe somebody's caring for somebody that is infirmed, elderly, sick, something like that, or they just have extenuating circumstances that really you can demonstrate to the IRS that this is really not in the government's best interest to keep enforcing this.
So Brian, somebody just ran to their mailbox, they grabbed the mail, they got one of these letters in there. Besides calling you, what should they do to protect themselves?
Open it. Open the letter. I got a letter from the IRS. What's it say? I don't know. I'm afraid to open. And I said, listen, as of about a year ago, they quit putting live rattlesnakes in those envelopes. So go ahead, open the envelope. It ain't going to bite you. You might get a paper cut. Just open the letter. And again, it's going to have some notations on it. These are government documents. They're black and white. They're boring as hell to look at. Your eyes glaze over when you read them. They drone on about statutory interest rates and portions of the tax code and that. That's fine. I mean, I've read thousands and thousands of these notices, and really there aren't hundreds of different types of notices. There's a few dozen out there, and I'm familiar with all of them. And I can tell from those notices where you are in a collection process. And by contacting us, we'll reach out to the IRS immediately. And in almost every case, we can put a hold or block on collections while we're moving forward to go ahead and taking steps to put things in place. And that's kind of a whole nother story, but in many cases, it requires a filing of missing returns and just different things. But we can generally put a block or freeze on collections if you reach out to us immediately, and let's kind of get everybody set up till we know exactly what you need to do to go forward to kind of get this thing rectified.
Well, Brian, thank you for the time and insights and analysis on all this. We appreciate it, man.
And thank you very much, Mike. Have a good day.
And thank you for joining us for this episode of the IRS Debt and Audit Podcast. If you received a lien or levy notice from the IRS, you just heard them say it, open it up. There's no rattlesnakes in there. Visit tampataxrelief.com to request a free consultation with Brian and the crew and get clear, experienced help before things escalate. Do me a favor as well. If you like today's episode, leave us a review, subscribe to the show, send it to anybody who may need it right now. As always, I'm Mike Lien. We'll see everybody next time.
Thanks for watching. Be sure to hit that like and subscribe button and leave us a review in the comments.